we've got an exciting situation where 2013 numbers were extremely strong. If you look at 2012, I think we traded roughly 125 billion euros. 2013 was actually upwards of 160 billion, so a really considerable move forward in the market. A lot of that was in quarter four, and so Q4 in London was extremely strong. I suppose the big move forward in 2013 was really where that capital's come from. We've seen a lot of capital coming to the UK, as we've talked about earlier, but actually when you look at that sort of cross-regional capital, 26% of the capital came from outside the European region, which is one of the largest numbers we've seen for some time. And I think we've got a broader capital base than we've ever had before. And when you look at the equity in the market, the equity today is probably a greater number than it was at the peak of the market in 2006, 2007. And so actually that points towards the debt markets being the large area of recovery that we need to see across the European markets. And I think that as we see those debt markets recover, perhaps that market can still grow even further. So as we start 2014, Europe seems well set. I think we've seen strong recovery in the US markets. Our Asian markets have been strong, and Europe is now in a sustained recovery. Obviously the UK is perhaps at the head of that, and we're seeing very strong numbers, GDP numbers in recovery. And we're now beginning to see the occupational numbers improve in some of the southern markets, which is perhaps the first time we've seen all of our markets heading in the same direction at the same time. But of course the big story has been London, and throughout the recession really of the past 3 years, capital has been flooding to London. I think a lot of that is down to the attractiveness and security of a global capital like London. I think investors have come from all over the world, both traditional markets like the US and Canada. The Middle East, of course, have always been big investors here. But of course the Asian market has been the one that's perhaps been the one that most of people have seen day to day. And some of our largest, most important assets have now traded to sovereign funds, family offices, insurance companies across Asia. And so now we have companies from China, Taiwan, Indonesia, Singapore, Hong Kong. All these investors are coming to London, have been coming to London over the past few years. And that just looks set to continue. I think people see a lot of reasons to be here through the downturn. It's been very much around safety and wealth management. I think as we look to the future, London is performing well. It's matured as a market. It's probably come out stronger from the recession than it went in. And we've seen perhaps a move towards the TMT sector. We've seen occupational trends change. And it's been a draw to all sorts of different companies, not just finance. And so I think that the prognosis for London for the next few years is pretty strong, although it has performed extremely well over the past couple of years. When you look at the money that's been invested here, it's continued to grow. I think we have statistics around the amount of money in the larger buildings you see around us. Perhaps 80% of the market has been foreign over the past couple of years. And actually of that, I think 40% has been new capital each year. So you've got new forms of capital from other markets around the world focused on London. And really their strategies develop in Europe, starting in London and then really emanate out. Germany has been a very solid market, but if you compare it to London, last year 80% of the market in Germany was German. And so it still had a very stable indigenous capital base, whereas London has become, that international centre, and it's an interesting, comparison between the two. So I think the interesting thing probably from last year was the change in where investors are really spending their time, both in locations and in terms of sectors. So if you look at the capital that's moving around continental Europe at the moment, during 2013, earlier part of the year, and 2012, you saw a lot of investors really focused on core, and new capital coming to the market focused on core capital, core locations, long leases. So the big change was really now looking for growth, and I think a lot of investors now beginning to feel much more positive about the EU. We've moved away from crisis. And so I think you've now got what was a real north-south divide between London and the capital flowing into the UK and London market as a global centre of finance, through to the recovery of the markets around Europe within the EU. I think you've got a number of factors there. One is obviously currency. People have become a lot more positive around the EU, around the euro. We've moved away from that crisis period, probably into an area of more stability. I think people are still very cautious, but I think because of that, they're beginning to think about growth and which markets are going to offer most performance as we go through the next couple of years. I think in the value add space, I think that's perhaps where most of the capital that's been raised is focused. We've seen huge amounts of capital raised from around the world now focused on EU, European recovery. And I think Spain and Italy are at the forefront of those markets. So I think that what we're seeing is investors beginning to invest in a little more risk and beginning to just look at those markets where hopefully leasing numbers will increase, and so we're beginning to see the rental recovery, which is going to hopefully drive returns in the future. But at this moment in time, it's definitely a macroeconomic play in that people are backing the recovery of those markets at a higher level, and hopefully that will come through in rental recovery in time. So capital markets today within CBRE is a single line of business globally. And capital is moving around the world faster than ever before and into more markets from more markets. And I think it's important that we've developed our business to really match our clients' expectations as capital moves into new markets. In order to do that, we've got dedicated professionals in Europe who are solely focused on those emerging markets from Japan and China, Taiwan, Malaysia, Korea, and they're just focused on integration with our local teams and our clients from that region. That combined with our capital advisory business, which really focuses on the capital markets services within debt and equity, means that we can just offer so much more optionality to our clients as they look for the best solutions in the marketplace today.